Investors and traders, welcome to the channel. Today, 16th of October 2024. Hope everyone is having a great day. We will take a look at the key US markets. We will cover the interest rate markets through the eyes of the US Treasuries, and we'll take a look at the shorter end of the curve, 2-year Treasury note, then the 10-year Treasury note, and the long bond futures. We'll also cover the dollar index, major currencies such as Euro USD, Japanese yen versus the US dollar, and the Great British Pound versus the US dollar, gold and silver. And then we'll take a look at the key US stock indices. As always, this video is for educational purposes only. It is not a financial advice. So let's start by taking a look at the daily chart of the US 2-year Treasury note. So we had been discussing that ever since it actually reached pretty much the 38.2% retracement. We were expecting possible resistance around here also from the structure from left hand side. So we have seen a pullback. So the yields on the 2-year Treasury note, they have actually moved a little bit lower. However, there is still a chance that it could make a move higher to 4.34%, which is going to be the structural right over here. However, with the market just being sideways in a trading range, the chances favor sideways to downward trading, and we could see 3.87% on the 2-year Treasury note. And then if we move to the ZN, which is the 10-year Treasury note, here, right here, which is the 38.2% retracement, going back all the way when this move started and it completed this ABCD right here, and this has held. So we were expecting this to happen, and this has happened. So you can see it's been 3 trading days where it kind of formed a double bottom formation right here. So this is also an indicative of lower yields on the 10-year Treasury note. Now, something really interesting is actually on the long bond futures, 30-year bond futures right here. That's the 38.2% retracement since this move actually started, going back all the way October 2023. So it's nearly getting to about a year old move. And also we have this pattern formation highlighted in orange right here. So as long as this support is held, the chances are that we are actually going to be moving higher. So bullish on the bonds to the upside. In other words, yields moving lower. Now, if we take a look at on the TLT, which is the ETF for this, a very similar kind of price action in terms of pattern formation. I've not drawn it the way I've drawn it on the 30-year long bond futures, but it's a very similar pattern. And look at this trend line; it has held thus far. So it is indicative of lower yields to come as long as this bottom is held coming from 14th of October, beginning of this week. Now let's move on to the dollar index. The US dollar has been really strong, and here it completed our target, went slightly below that, found a lot of support from the bottom structure around here, and it has gone past the 38.2% retracement, which shows that there's a fair amount of strength in this market, and it's gone right into this a little bit of it's not really a gap formation here, but it is a um, structural resistance. This is what we were talking about. 103.35 is just gone and actually achieved that target today. Now it's gonna be really interesting how this dollar is going to trade from here, because if it is really strong, then of course it can take out the structural resistance coming from here and here. Otherwise, we could expect some sort of trading range to develop over the course of next couple of days, and then we'll see whether we begin to see some lower prices or some sell pressure come into this market. But a pretty strong move since the beginning of October, and it was kind of expected because of our patterns being completed. Now on the flip side, let's take a look at the Euro USD. And here we go. So the Euro USD, it has come down a lot lower because the dollar has been strong, and it is right or very close to the 61 61.8% retracement. Let me draw this. Yeah, it's actually really approaching that pretty quickly actually. So that's another strong point of support, because this will be from the lows around here. So pretty strong support. We are getting close to that area, so we'll keep an eye on this. And then if we take a look at the Japanese yen, so here we go. So Japanese yen has actually been depreciated against the US dollar ever since we found support from this pattern formation right here. So initially I was thinking that maybe we go about right here, which is around 148, 149 level, but it's gone a little bit beyond that. But still, this 38.2% retracement is still there. So it's just going in more into a trading range formation. And if we were to go back to lower to about a 4 hour chart, here we go. So you can see that it is actually, going in this kind of a wedge pattern formation like this, and then we have it like this, um, and it can still go right to about 150 as well. So we'll have to watch it on a shorter term, like a 4 hour, maybe an hourly chart, if it begins to break to the downside by breaking this wedge pattern formation. Now, something really interesting is actually on the Great British Pound versus the US dollar. Here we go. So today, I believe some inflation figures came out in the United Kingdom, and the inflation is finally below the 2% mark set by the Bank of England, and that caused this big move down today. But the really interesting thing is it actually went right to this 38.2% retracement, this level around 129 and 129.90 that we had spoken about in the weekend video, and it just got there, hit that level. And what we have seen is not too much of a reaction from here, but we also have structural support come from 11th of September, and then we have this structure here on 7th of July. So fair amount of support from structure right here, right at 38.2% retracement. So it is a pretty strong support level, and we'll be watching whether the US dollar is strong enough, or in other words, the British pound is actually keep on going lower, maybe come down right towards this trend line to test this one. That remains to be seen, but this is a pretty strong support region that the currency has approached now. So now we start by taking a look at the gold. So this is the daily chart of COMEX gold. This is not future. This is not the spot gold. And if you happen to be actually watching spot gold, your price levels are going to be slightly different, but um, the patterns overall are going to be quite similar. So gold, when it started its move on 10th of October, we mentioned that it looks pretty strong here. It broke above this trend line as well, and it's just gone right into the all-time highs of 26th of September. And the chances are it's likely to actually keep on creeping higher and actually take out these highs. And gold is actually pretty strong, and ever since actually 10th of October, this is what we had been looking at, that the gold was actually getting stronger. We can have a small ABCD which could in fact target around 2720. That's the level where we can look at for this market to go shorter term. In fact, if we were to just take a 1.272 expansion, here we go, here we go, then we are getting, oops, some targets of around 2733 to even 2765 on the daily chart. So these are possibly the regions that this market is moving into. And if we take a look at silver market not as strong as gold, but still moving higher. Um, and I think it's gonna go for the 33.85, maybe 35.29. But some overhead resistance coming from structure right here. Now let's move into the stock indices. S&P 500, if you remember from the weekend video, we had a timing come in for Monday, but Monday was actually a bank holiday, but the stock market was open. So Tuesday, when the regular sort of, the volume started come into the market, we saw the market actually pull back a little bit, and then today there was just no follow through to the downside, which is good. It has moved into this box which we had drawn as our target, but the chances are the cash market is actually moving towards the 6,000 level. And let's have a quick look on the futures as showing something similar. About 6,100 is possible, and the NASDAQ is right into this box here. It's still finding resistance from the 78.6% retracement, as can be seen. But the chances are it's going to go for the completion of this ABCD right here. So around 20,900, maybe try attempt another new all-time high. Excuse me. Now let's take a look at the YM. So here we go. YM also looks strong. It's gone into this box here, and if we actually take a look at the this weekly chart, I think it's got a little bit higher to go, right into this box, or at least 44,200 roughly. And Russell 2000, there we go. So Russell 2000 actually being pretty strong. You can see it's start of the week. It's not the week has just started, but if we just take a look at the okay, I don't know why it is doing that. Should be showing futures. Here we go. So ever since it formed this ABCD, it's going into this region, so also looking pretty strong. There is going to be some resistance from structure here, but our target has been inside this box, so I think it's likely to get into this gray region. So this is what we are watching in the key US stock indices, a short summary of the markets for today. And let's have a very quick look at Nvidia actually. And in Nvidia, you can see there was quite a lot of action that came in yesterday, and that is basically a gap formation right here. There is one gap formation right here. We saw a little bit of a pullback, but this is the gap formation because of this bearish candle and this bearish candle right here, and it's also very close to our this ABCD pattern. So there is a lot of overhead resistance here. But if we were to take a look at the weekly chart, and in this we have this pattern right here. Of course, this week is not complete yet, but there is still a possibility, and this is like a longer term weekly chart. As long as we don't have this 3rd of September low broken, there's still a possibility it could actually go make an attempt to 150 to maybe even 154. But as you can see, what the stock is doing is you don't have that kind of bullish pattern right here, or the bullish move how the stock was moving beginning of the year. And this is more of a lot of distribution here taking place. So maybe perhaps the insiders are actually getting themselves out at higher prices. So of course, with the higher prices, they benefit a lot by selling their stock. But if they stop selling for a bit, the momentum can still actually carry the stock a little bit higher. But this is also a place that the trend is actually transitioning from a very strong trend to a trading range. And it had a spike phase, and now it's moving into more of a trend and into a trading range environment now. So this is what we are watching. Thank you very much for watching the video, and if you happen to like our video, give it a thumbs up. If you happen to like our technical analysis, then please subscribe to the channel as well, and if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss on anything. Good luck, good trading, and speak to you guys soon.